Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 27th of September, 2023. Thanks for coming in here today. Um, kind of honored that many of you have me as part of your morning process. I appreciate that and the vote of confidence. Today we have episode number 2545. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopefully loud and clear. The convergent trading pre-market summary sheet this morning is tilting risk to the mild risk on side. And overall, there isn't much to talk about in terms of overnight news flow. A couple of key elements here. The PBOC, which is the Chinese central bank, says that the Chinese economy has increasing momentum and that it will support the economy in a targeted manner. So that's a vote of confidence from the PBOC for investors. This morning, the German GfK consumer confidence came in line. U.S. durable goods came in higher than expected. Positive news. ECB's Elderson said rates haven't necessarily peaked yet for the Eurozone. And then Fed's Kashkari this morning, who's been quite talkative, says that the risk that the rates will go higher. There's a risk that the rates will go higher. He expects the Fed to hold rates steady in 2024. Not something that the market wants to hear. The market, of course, is on Fed crack cocaine, that is, not other types of cracks. The two parameters that come along that impact businesses, especially techs, and in terms of interest rates, is the ceiling, how high interest rates go from the Fed, and then the duration. And this is saying that the duration is actually pretty long. So that's not great news. Treasury yields falling today for the first time in a while. Overall, participants in the market really are in this kind of negative feedback loop where the market kind of sells off. Then people think the market is is selling off. Technical traders or investors are seeing that it's selling off, so it sells off, and then that feeds itself. It's kind of in this kind of loop right now. And then the other piece is the U.S. government is likely to shut down this Friday. The probability of that has been set at about 75%. Shouldn't have much of an impact, but if it does last a while, it can really hurt people. And of course, we won't get any federal government type numbers, which the whole planet kind of monitors, including the jobs report next Friday and so on. Today, what's left in terms of scheduled releases is the crude oil inventories at 10:30. Moving on to the S&P. The S&P is in a kind of an interesting, almost balanced but multi-distribution profile. The auction condition is somewhat of a price discovery. It has actually been in balance for quite some time. I could almost lean on the auction condition being balanced right now. This is what I would set it at. But it does have multiple distributions in it. But currently, as we speak, the point of control, as well as price, as well as the day-generated prices are all on top of each other. The inventory is 100% long. We have not touched or traded below yesterday's close since the session opened. The volume's 225,000, which is actually, interestingly, continuing to be pretty heavy, right? We expect volume to be 170,000 for the S&P at this point in the day. It's at 225,000. Point of control shifting to 43.29, 43.30, which was a key area yesterday. We're holding steady there. and the range is only 20 points. We had close to 40 yesterday. We had 40 plus the day before in the overnight session, so things are kind of slowing down a little bit. Let's take a look at the technical side now. Yesterday, um, when we met, I reiterated the fact that a couple of things that we needed to keep track of, to keep in mind, is the one-time framing down on the daily profile. As long as that one-time framing down continues to be that way, then the expectation is more of the same. Things get a lot more interesting and change once we break the one-time framing down. Yesterday's high is 43.54, and that's what we would have to break today for things to get interesting. But what I said yesterday was that given that the market was opening at the low end of the range, the expectation is any attempt at pushing higher is likely to be refuted. We had 43.50 as a key area, and it was opening right on top of 43.49, and the expectation is 43.08. 43.08. That's what we're looking for. So any push above 50 or into that prior range is expected to be a selling um, a selling opportunity up into 63 with a target of 43.08. Okay, so that was the plan. Here's what actually happened. Let's enlarge our S&P chart. This is a 4-tick rank. This is a 1/8 PNF. Actually, it's a remnant of the trade talk session at Convergent yesterday. Let me put it back to Arenco. Okay, so we open up at 46, pretty close to where we were at the trader bite. We push up to 54, and then we break down. We see that the market's making pretty good progress to the downside. Delta's negative. We talked about Delta being negative, and that's further support for an easier flow to the short side than to the upside. And then we just continued to kind of push lower. We had range extension down here. We did look like we were done in this area. There were indications of buyers were stepping in and sellers were stepping back, and then it ultimately extended to the downside. And where did it go? The low yesterday is 43.0550, 43.06. We were looking for '08. So check mark there. That's done. So what we've done is we've tagged the yearly VWAP yesterday. And as soon as we did that, you could see that there was some buying interest. You could see the delta kind of moving positive and getting stronger and stronger in the overnight session, pushing higher with 100% long inventory today. And we continue to squeeze higher. Crude oil this morning is gapping up. Crude oil has pushed into 92.40. If you remember, with crude, we were looking for it to potentially break down into 87.75 or so, and it turned around and gapped up. There was some news out of Russia and what they're doing to facilitate, I think, to curb actually exports on crude, things like that, and that's kind of supportive of this product, this commodity, and that's a bit of a drag on equities, of course, and on inflation, but it doesn't seem to be having much of an impact here. Just an interesting to note. Crude is over up 2% or more. So what we have here is a market that's pushed up in what is, somewhat of a kind of a cup and handle formation with the pivot point right at the overnight high at 36, and the expectation is this is likely to continue higher. Again, since we hit 43.08 or 43.06 yesterday, which was also a stock zone, buyers have been in control, and I'm expecting today to be the day they reverse. So I'm looking for the market to kind of flow upwards, and I'm looking for a spike through the 54, a retest and spike through the 54 today, expecting it to be a grind on the way up because these are early buyers, and they're not likely to come in, with both fists grabbing for every contract they can get their hands on. It's likely to be a somewhat of a grind. What changes my mind? What would change my mind is if we got below yesterday's point of control and settlement. Look at how sharp that point of control is yesterday, um, and we get below settlement. There are two distinct distributions to yesterday's action. I'm not going to count this one at the top, um, but there are two distributions, and so the line in the sand remains right in here on the S&P. I'm looking for anything that remains, if the market remains above 43.22 today. I'm looking long side. I'm looking for the overnight high to be taken probably before we even open. They're likely to take it. The delta's positive, and there's a little bit of lifting going on. Right now, we could see large and V large lots kind of pushing a little bit. We'll look at that in a minute. But for now, I'm expecting this back. Oof, very scratchy throat. There we go. I'm looking for this thing to test 43.50 and to take out the 43.54, reversing the one-time framing down. Does that mean we'll rally and blow through today and just chase it all the way up? It doesn't mean that. It doesn't mean that. It just means that it's likely to accomplish that, pull back, kind of sit sideways, suck in more sellers at that point, make it look like a failed liquidity test, suck in more sellers, and then start to grind them out into the close. So the way this is expected to look today is inventory, we open. We open, inventory rebalance down, and then turn up and squeeze and squeeze and squeeze, spike, come back in, hold steady, and then squeeze and squeeze into the close. Okay, the target to the upside is 43.63. If you recall from yesterday, uh, 63 into 67, something like that. That's the key target above. The line in the sand for us is right in here. The line in the sand is 43.22. As long as it remains above 43.22, I'm looking to buy pullbacks. If it falls below 43.22, it has a hard time pushing back up. A liquidity check where it just plummets and turns back up in a reversal, that doesn't mean anything to me. But if it falls and then it can't pull back up and it starts to flutter there, hold there, this is likely to turn into a gap to settle trade into 43.14, and then we make our merry way back to 43.08. But that's not a likely scenario. So my primary scenario is higher into 54. 54 is the bullseye here for today for the buyers, right? This is going to be the first indication that buyers are coming in and pushing the market far enough to squeeze out, to push out all the selling that's happened. We've moved about 200 points here in about a week, so this thing is likely ripe for a bounce. Here's the big picture composite chart. This is the composite chart here. We gapped down. We were up here at 4,500 just a week ago. We've gapped down, and we've just made lower highs, lower highs, lower highs, and we've met with our yearly VWAP here on this RTH basis, and the expectation is this is likely to grind its way back and retest 4,400, as you can see here. But overall, the chart's pretty weak. Even for the NASDAQ, you have an impulse higher pullback failed, impulse higher pullback failed retest, and it has taken out this prior low. It's a bit of a distance to its yearly VWAP, so it's relatively stronger on the year. The Nasdaq has performed better than the S&P, of course, and it's above its main low volume node here. The Nasdaq is a little bit more bullish. The Nasdaq is very, very likely to take out yesterday's high this morning. The short side is likely to be weak this morning. Likely. Remember, I'm always using probabilistic words. Likely, possibly, those kinds of words, because I want to keep my mind open to the fact that I am also able to be wrong. I can be wrong as well, and to just be open to whatever the market kind of yields. So please think of the markets in that way. Think of it as it's a possibility. It's not a certainty. I know a lot of folks that I see online talking about trading speak to it as if they figured it out and everything is a certainty because a certain chart pattern or some average is broken. There is no certainty in trading. The certainty in trading is that it's random. So what we did here was we started to dig into this big composite back here. If I can move myself out of the way, let me move myself out of the way. There is a we started to move to this big composite 4330, was it? Yep, 4230 was the potential target, but we're likely to give it a rest for now and kind of climb back out through the gap zone that was there and take us back up to 63 for today. That's what we're looking for. The NQ on a balanced basis, you can see that it has quite a bit of work to do above. CL for a quick look. Here are the CL composites. We formed this one just recently. We traded below it quite a bit, and the idea for the CL was it was likely to push lower, but it didn't. It is actually breaking to the upside. So what this is for the CL is a rally, a flag, balance, sucked in a lot of volume, and that volume is now dissipating to the upside. Crude is doing its thing. Here it is. When we look at crude, you could see that we came from balance. Here, very beautifully done here in crude. Balance, gap, balance, gap, balance, right? Gap, fail back, and hold, gap, fail back, and starting to form balance. And so we expected balance, and we got it, and now it's breaking to the upside. Again, the expectation here was it's likely to work itself down into 87.75 or so, and it didn't do so, so that was wrong. The trend is still, still strong for crude. There's a lot of news flow for crude. So that's where we are. Part of the business is to be wrong. It's just, if I'm out here talking to you and I'm telling you that I know what the algos and the banks and the funds and the co-located machines and the black boxes and the dark pools, if I'm out here telling you that I know what that's doing and what that is, then you should probably find another channel because I'm full of crap. The fact is, we're wrong a lot, and it's just part of the business. We just want to make those wrong trades or plans as cost us as little as possible. Let the correct ones kind of run as far as possible. That's just the way the game is. Our factors are, in my opinion, our factors are the best way to improve performance or to get positive performance, in my opinion, more so than getting the perfect entry or finding the perfect strategy, because there is no such a thing. Good luck, and I'll catch you tomorrow. Take care.